internet of value at Ripple, we're thinking much bigger than just cross-border payments. It's kind of like Amazon with rare books in the early days, just this market happens to be a $10 trillion market.
We are at a historic turning point.
Said in the past that you are doing for money what email did for communication.
Moving the whole revolution forward.
Take on it.
There's trillions of dollars parked around the world.
XRP.
Is there a possibility that Ripple could take over SWIFT one day?
Well,
welcome back, ladies and gentlemen, to episode 24 Hours Script. Let's get right in today's very important video, a secret roundtable meeting that took place October 17th of this year is going to completely blow your mind. And when I say they're all in this together, well, this video is really going to show you what I mean by that. Yesterday, we covered Michael Barr, former Ripple advisor. Michael Barr will supervise the Federal Reserve. This is a very, very big deal. And then we talked about Ripple and the Module Foundation creating a more financially inclusive future. And also we covered how their CBDC platform is going to be providing access and inclusion broadly to banks, fintechs, members of the public. But folks, let me tell you, sit back and enjoy this one. Because here we have Jerome Powell and Michael Barr being sworn in July 19th of last year. And as you guys could see, the board members, we have the head, Jerome Powell, we have Philip Jefferson, and then we have Michael Barr. And we also have Michelle Bowman, which we are gonna get into. You gotta listen to what she's talking about because it is very crucial to get her perspective because her and Michael Barr work together on this. The Committee for Financial Stability, we have Michael Barr looking over it, okay? We have Supervision and Regulation, we have Michael Barr looking over it. And we have Committee of Payments and Clearing and Settlement, we have Michael Barr and Bowman on this one together working hand in hand. So I'm telling you, this is absolutely massive. Because as you guys could see here, this roundtable meeting that took place October 17th, responsible innovation and money in payments. Listen to this part. Fostering a safe and efficient payment system and providing services that support U.S. financial markets and private sector payment, clearing and settlement arrangements. This is huge, okay? Listen to what Michael Barr says here.
I also want to be clear at the same time, Michael, it's important for us not to set up a regulatory environment that stifles innovation. Innovation is really critical to the financial sector. It's critical to the American economy. It's one of the reasons we have an amazingly vibrant economic system is because we permit, encourage, allow that kind of innovation. And then we need to let innovation flourish within those guardrails so that we don't lock in old technology. We should welcome financial innovation as a positive force that can increase access and lower costs for individuals and for businesses. At a more basic level, we need to focus on access to fast, efficient digital payments. This is a matter both of efficiency and of fairness. I have been working on issues of financial inclusion for a significant portion of my career as a public official and as an academic. We are seeing banks explore a variety of different models to issue dollar-denominated tokens on distributed ledger technologies. The proposals range from issuance of tokens on private controlled networks to facilitate payments within or among banks, to proposals that explore issuance of freely circulating tokens on open, permissionless networks.
It's hard to speak about payments innovation without mentioning the increased experimentation with new payments technologies, such as stablecoins and central bank digital currencies, happening in the private and public sectors, both in the United States and around the world. Stablecoins, as I have said in other remarks, need to be well regulated.
And as you heard Michael Barr there on multiple scenarios talking about you can't stop innovation. You shouldn't stop innovation. And there needs to be financial inclusion. And when we get into this PDF that was published by Michelle Bowman, okay, keep in mind she works hand in hand with Jerome Powell, Michael Barr, and this is a very big deal. Okay, listen to what she says here. So an important issue for us to consider would be whether a CBDC could provide the public with a more attractive alternative to cash in a world that may be shifting away from cash-based payments. In probing this question, we need to also consider the privacy implications and whether a CBDC would be a better alternative than private sector solutions. If the Federal Reserve were to authorize and direct it to implement a US CBDC, we would need to carefully consider how an intermediate CBDC with private sector service providers could be designed in a way that maintains financial institution involvement and minimizes disruptions to the financial system. That is huge. Apart from focusing on payments alone, it is also worth considering whether other policies would more effectively target financial inclusion, including policies that are beyond the remit of the Federal Reserve. And in the absence of a CBDC, some of the risks I noted may still exist as the private sector continues to innovate. You see how they're just waiting for the private sector? Including the risk of substitution from commercial bank deposits to digital wallets and the migration to less regulated digital assets, including stablecoins. You guys are about to get mind blown, okay? Many policymakers have discussed whether CBDCs could play a role in streamlining cross-border payments by using new technologies, introducing simplified distribution channels, and creating additional opportunities for cross-jurisdictional collaboration and interoperability. And this is why David Schwartz says this, and this is why I've been saying XRP, what they're trying to do is create a level playing field where every economy could connect together and move value like it hasn't been done before.
And then we're creating a level playing field across all the cryptos.
We have the technology to allow every financial institution on the planet to settle with every other financial institution in a compatible jurisdiction in any asset in seconds for less than a penny. Just think about this. Anyone who's made a payment knows that we're nowhere near that today. But imagine every financial institution settling with every other financial institution in seconds for less than a penny, any asset. That's fundamentally transformative. We have the technology to do it. Now we just need to figure out how to drive the adoption. And of course, there's all the challenges there's incumbents, there's regulation, there's inertia.
And of course, these opportunities may be limited by the regulatory and legal safeguards in place for payments between countries with different legal structures, including customer identification, customer due diligence, and sanction screening for compliance with regulation and policies for Bank Secrecy Act, AML. This is why it's very important for this Ripple net technology, because every different country will have their own different legal structures, and what they're trying to do with Ripple, again, fill in the blank, is a level playing field amongst all of them so they could use this big system, okay? And then this was released October 17th. Listen to this part. As an example, stablecoin issuers today are typically licensed or chartered at the state level as money service business or trust companies, and in some cases offer bank-like services, including the ability to store funds. However, while many of these issuers are subject to state supervision, they are not subject to the full complement of prudential regulation applicable to banks like capital requirements and prudential supervision. They also do not benefit from the backstops and protections available to banks like deposit insurance coverage and access to central bank liquidity in times of stress. Did you hear that part? To banks like deposit insurance coverage and access to central bank liquidity in times of stress. That is so big, because if you guys recall this video,
still needs to be played out, but I think where USDC is going to hit a cap is going to be at scale. So when I talk about the $10 trillion that we're processing every night,
I mean, USDC itself we've seen over $3.5 trillion of transactions. And so if we can, improve it with more scalable blockchain technologies like, Brad's company provides.
Boom, ladies and gentlemen, boom. That is absolutely massive. Because if you guys recall what I said, these stablecoins, if they need to go ahead and use the digital asset XRP, it needs to have clarity. And that is why Jerome Powell said this.
The potentially fast and wide adoption of a global stablecoin, potentially a global currency governed only by the incentives of a private company, is something that will deserve and will receive the highest level of regulatory expectations, and will receive the highest level of regulatory expectations.
And here we have Jerome Powell, Michelle Bowman, Michael Barr all working together. Does it make sense now? It has to have the highest level of clarity, and that's what Ripple and XRP have now. And also, keep in mind, in terms of financial stability, you know how the Federal Reserve just prints money out of thin air? Trillions and trillions and trillions and trillions of dollars? Guess what? XRP's escrow is going to help with financial stability, so they don't need to be printing all this money at the end of the day. That's why they're printing so much, because they're going to reset the system. They're going to introduce a new system, and they're going to ditch the old system. So if you're going to be introducing a new financial infrastructure, do whatever the heck you want. Print whatever you want. Grow the debt. Because at the end of the day, that bubble is going to burst and a new system is going to be implemented. With that being said, ladies and gentlemen, I do appreciate every single one of you guys. Let me know what you guys think in the comments down below. And like I said, keep in mind that escrow, we will go down, this channel will go down in the history books. That escrow is for financial stability, and that's what every nation looks for, a track record. With that being said, ladies and gentlemen, we'll be back with another video. It needs to have the highest level of...
We started building RippleNet with the thesis that crypto liquidity would eventually be able to support robust global payments, large payments. RippleNet was designed so that customers seeing the benefits of our fiat-based network could flip the switch to ODL once the market was mature enough. And this is exactly what's happening. Flip the switch.
I think what we're building has, it's solving a real problem. And I think all of the tokens, my advice to anybody would be, understand the utility. If there's real utility and there's real value being delivered to a real customer, there will be value in the token.